Hello everyone, welcome to this episode of Market Pulse. I'm Ajit Mahuli, the founder and mentor at Learn Price Action Trading. Let's take a look at what the indices have been doing and what they're likely to do in the coming couple of weeks till the end of May. So that's the Nifty chart which we had discussed. So as mentioned last time, probably 250 to 300 is now going to be is where we had a reaction. Let's take a look at what the indices are doing this week, and what could be the outlook. Now, this month has again started bullish. We went and gave a new high. We went beyond this point, but remember, this is still a live candle, and we have nearly more than 3 weeks left for this month to be over. So prices can turn any time, and they can even go and hit a new high. But those clues, we will be getting it from the smaller time frame. That's the monthly demand zone, no change. And there is no supply, remember, but it was a continuous fall of 4 months. So there will be some areas of fresh supply on the smaller time frame there, which is what we'll try to figure out where it is likely to turn. On the weekly, we have just hit the weekly supply zone, which is a pretty good supply zone on the weekly chart. And we can even go in a little bit deeper, let's say up to anything between 400 to 500, depending on how the trend remains and what the smaller time frames have to provide us. So far on the weekly, that's going to be the demand zone. So your range for the weekly for this month is going to be from, let's say, 17,700 to maybe even 18,500. That's going to be the range. But as of now, it's getting stuck to pass 300. If you've seen, it's not finding it easy to pass 300. So we need a closure above 300. But even if we get a closure above 300, those will only create a sucker rally within this higher time frame supply zone. So just be careful, and it's good to remain light at these areas. On a pullback, you can go ahead and buy. We'll see where the pullbacks is. Right now on the weekly, the demand zone starts at about 650 to 700. So that's a range for this coming week. Those are still the fresh areas of demand. Now let's take a look at the daily chart. Our daily chart is pretty interesting. If you see, that's the main area of supply. Now, of course, prices can go in deeper inside this. If you get a pullback, we can even go long for a short-term income trade. But let me just first mark these areas. So that's the area I would probably draw the same line again, which I drew last time. So that's the area. We need to wait for prices to close above. So right now, the high is still not even 18,300. We went up to 18,286, and we are not able to sustain. So tomorrow and day after tomorrow's price action will be crucial. But at the same time, we have very good areas of supply zone at these areas. So that's probably the area where we could look at swing shorts on confirmation or buying per month options. Now, can this supply hold? Yes. So what do? Wait for confirmation to go short. And if we don't get confirmation come down, that's the fresh area of demand zone currently on the daily chart on Nifty. I'm not going to be concerned about this. I'm just going to be waiting for this to be breached because it's too high on the curve for us to be a buyer here. These are all intraday areas. So once we start moving below this area and probably close and honor these areas, we could easily move up to 17,800, which is a fresh daily demand zone in a trend context. And we could at least target 18,350 as number one, and number two could be 18,500. But you need to be patient for prices to come here. If you think prices will not come here and go here, then stay on the sidelines and just focus on intraday trading and take every price action day by day. Now that's a crucial area. Now this whole week price could can price remain in range here? Yes, it can remain in range here till the weekly options expiry. So once you are here, exit longs. Once you are here, exit shorts. On breach of this, that's the area where I would be interested in getting into some long position. And you can even look at this entire area from 17,800 to 17,500 is going to be a crucial area for Nifty. If it breaks 17,500, then we could probably go and breach all these lows. But if it stays there is a good chance that we can at least make an attempt to go again back to 18,300, which will also provide you very good reward to risk ratios. So no longs as of now. Wait for pullbacks to these areas for going long and check on confirmation to go long. And if the index starts moving up, you should not get into any shorts till we get some confirmation. If at all you want to get, it should be 5-month options as swing trades, but that's the best area for that. So that's the daily picture. The range will be somewhere close to 18,300 to, let's say, a wider lower range would be 800, but for tomorrow it could even be 18,000. So 3-point range for tomorrow. Going back to the smaller time frame, so these are your fresh areas of supply on smaller time frame. So till then, no set and forget shorts. Till then, everything is going to be purely confirmation. So these are all the areas of supply here. Can price go up to this? There is a good possibility, but before we go there, these are all the hurdles that Nifty has to cross now. And all this is retail area. So this is where most of you might even get FOMO feeling. But remember, these are not areas of buying. If you think Nifty is going to give a new high, let it give a new high. And if you are have a bullish bias, please wait for the daily demand zones here to enter into the index on smaller time frame intraday areas. These are going to be your ranges. So about 18,350, let's say, to 18,000. That's the range that index will keep trading tomorrow. If it either breaks this, so even remember, if it even breaks this, it could just be a spike and then it could come down, and the same thing might happen here. And these areas are very critical where you might lose money. So it's better to stay on the sideline, let it come here to get into shorts, or let it come to the daily areas as we have seen at between 17,800 to 17,500 on confirmation. You can look to trade a wider range from 17,800 to 18,400. So cautious approach, no more longs. If you have any futures long, keep trailing or either hedge it or buy some or exit for profits. A quick look at India VIX. Now, this is very interesting. If you see this, Friday we had a great fall primarily because of the HDFC Twins. Thursday we had a rally again primarily because of both of the same. And between Thursday, Friday, and Monday, volatility hasn't dropped. So it's increasing, which shows that people are getting a little skeptical. So that's a warning sign to not get into any aggressive longs. We are going to hold this demand zone on the daily chart. And if we start moving beyond, let's say 13.5, 13.7, you could see VIX easily move up to 15. And that is what will draw the index to, let's say, 17,900 to 17,800 areas, where we can look for confirmation longs and trade on the long side for the remaining of the May month. Again, this is based on the current price action. If we break those demand zones on the daily, then we'll have to change our stance. So trade cautiously, don't be in a hurry to get into trades, and wait patiently for your price to come. A quick look at Bank Nifty. Now, Bank Nifty, even though was stronger than Nifty, was also weaker on the last day of last week. So that's the scenario. We are into a monthly picture of supply. These are the areas that we marked last week, market pulse. Bank Nifty has enough room to, if let's say this supply holds and it starts coming down, Bank Nifty can pull back to, let's say, 41,800 to 42,200. That is the range. We are in retail areas. Buying is not allowed. Don't get trapped by the up moves. Remember, that's how the professional works with the retailer's mindset. Now, this is still uptrend. There are no demands here. So eventually, I would expect maybe if, let's say, the fall continues from tomorrow, the Friday fall that started, we could even end up all the way to 4160. So if you're getting into short on confirmations, keep this area of 43,600 as stop loss, and you could at least target, let's say, 42,200, which will provide good reward to risk ratio. Now, Bank Nifty is in a critical area. Can Bank Nifty spike us? Yes, that's a possibility, but I would be happy if Bank Nifty pulls back to about 42, 4200, shaking out the bears and then starts pulling up. And here they will shake out probably the bulls before the final big fall up to, let's say, uh, 39,000, 40,000. But that probably might only happen in June because we are in result season and index would be managed and may not fall beyond fresh areas of demand zone. On the daily chart, if you see, that's the area which we went because of the expiry, which was more probably due to the HDFC results and HDFC Bank, and then the reject news. And next day we saw a heavy sell-off in Bank Nifty, which came all the way. So 1 days of candle took away 1, 2, 3, 4, 5 days of price action. And that's how the retail areas work. So if you start going long here, that's going to create problems. So that's the best supply on confirmation to go long. Can we make an attempt to reach 44,000? Yes, but probably a pullback at least towards this fresh area of demand zone will give more strength for the rally. So if we, let's say, or even in this area on the daily chart on a confirmation between 42,300 to 42,000, that's again a confirmation area. This is also one of the confirmation area. So if this week we hold this demand zone, next week we could see a move up. So then the outlook would be short-term bullish towards a target of, let's say, 43,600 to 44,000. Now, on its way back, Bank Nifty ate up all those demand zones. So this is the only area which can probably hold it. Otherwise, the next stop will be somewhere close to 41,600, 41,500. If you look at smaller time frames, intraday time frames, that's a fresh area of supply, which is a very good area to get into some long-term options, put options on confirmation, short futures. And that's 75 minutes. So if you see a very compressive move up and it just took 4 candles for it to raise 5 days of gains, that's a pullback. I am not still bullish about Bank Nifty because if it had to reverse, it would have gone quite up. Nifty did give a high, don't get foxed, those could be technical traps. Today's move in Bank Nifty was primarily second rung banks, not the primary one like an HDFC or an ICICI. So primarily IndusInd Bank and State Bank and other PSU banks. So be careful with private banks. We still don't have any permission to short for swing, but you can look at some confirmation for short-term bulls, and that's the area which I expect the number one as the minimum target for this fall to get arrested. So that's where it will come, where if you are in short, you can exit. And all these areas are going to be confirmation longs. So once it comes here, let it stabilize, and as it starts moving, move long up to at least, let's say, 1,500 to 2,000 point move. Now, Bank Nifty is in a critical place. Nifty has went and given a new high. Just be cautious with Bank Nifty because once it starts falling, 1,000 point fall is nothing for Bank Nifty when it starts falling from key areas of supply. All right, so cautious view. This week, you need to curb your bullish instincts. And if you start turning down below 43,000, get out of your long positions and wait for these areas to get into long. And if you're in shorts, your immediate targets could be somewhere close to, let's say, initially 42,400, and then this area of 42,000 to 41,500, where you can look at some long positions for the rest of the May. Hope that gives you a good idea about how to trade the indices and their stocks for the coming week. Have a cautious week, trade well, trade safe.